This is getting wild and you'll want to hear this. US financial markets just saw one of its biggest buying sprees in years, with total ETF and single stock purchases hitting 5.9 billion last week, more than double the 52-week average. Institutional investors led the charge, scooping up 3.7 billion, the 10th largest weekly haul in nearly 2 decades. Corporations followed with 1.6 billion in buybacks, while retail and hedge funds added their own fuel to the fire. This frenzy has lifted the 4-week average of equity purchases to 2.8 billion, underscoring just how strong market sentiment has become. Zooming out, we're now 16 years into the secular bull market that began in 2009. The big question, how does it end? History offers 2 possible playbooks, 1968 or 2000. The late 90s cycle roared into a plus 114% melt-up before collapsing into the dot-com bust, while the 1960s ended with rolling peaks and deeper pullbacks. So far, today's market is tracing a pattern closer to the 1960s than the 1990s, which suggests more measured highs before an eventual peak. With CAPE models pointing to further acceleration, investors may still have runway left before the final chapter of this bull run is written. And then there's Nvidia, the undisputed face of this era's rally. The chipmaker's weight in the S&P 500 has exploded to a record 8.2%, more than double its share at the start of 2024. Its 4.4 trillion market cap now dwarfs the entire US energy sector by a factor of 3, a complete reversal from just last year. Individual investors have been piling in too, buying stocks in 33 of the last 35 weeks. Love it or fear it, the market is making history right now, and Nvidia is the crown jewel of this extraordinary run.